Big election in the US last year, that's behind us. Here in Australia, we have one coming up. Do you think it's something people need to pay attention to?
Absolutely. So investors and companies don't like uncertainty. So we have seen consumer confidence and business confidence under some pressure. Of course, the cost of living pressures for consumers are one factor, higher borrowing costs and mortgage costs the other. At the same time, we are seeing businesses also dealing with higher costs, particularly for labour and for materials as well. And the polls here in Australia are very tight at the moment. So if you look at the two-party preferred between the incumbent Labor Party and the opposition coalition, those polls have tightened on the two-party preferred basis. We're looking at 51 or 52% to the coalition versus 48 or 49% for Labor. And of course, there is rising appetite for independents or populists around the world. We've seen that certainly in the US. And if we do see the potential for a hung parliament or a situation where a government is in a minority position, then that's not so good for the Australian economy, let alone for investors. And of course, that could potentially stymie certainly government spending. So one of the big components of the Australian economy in terms of propping it up over the course of the last 12 to 24 months has been government spending. That's represented about 26.6% of GDP. So a lot of jobs have been created by the government. Around 60% of jobs have been government-related jobs. Government spending, certainly around the NDIS in particular, and other facets around infrastructure have propped up the economy with consumers under some pressure. The economy really is growing below trend at the moment. And what we could see if we see a change in government, for example, with what we're seeing in the US, is some more fiscal restraint. And also at the same time, commodity prices are down, which has resulted in company tax takes being down. Bracket creep for personal income tax will be lower as well. So that gives the government less ammunition to spend. That could reduce that fiscal pulse. But at the same time, it could happen at a time when monetary policy is being eased in Australia, interest rate cuts, and that could also lead to support for the economy.